You're watching Magnetic Media News Network. I'm Mia Kudos. This is Behind the Headlines, because what matters isn't only what happened, it's what happens next. Let's begin. What happened? Central banks in major economies have recently adjusted their communications, signaling a potential shift in monetary policy direction. These adjustments follow months of aggressive rate hikes aimed at curbing inflation, which had reached multi-decade highs. Markets have interpreted these signals as a possible pause or slowdown in further tightening, though no explicit commitments have been made. The ambiguity in these communications has introduced volatility across equities, bonds, and currency markets. Who does it affect? This shift in central bank messaging directly impacts investors, who must now reassess their portfolios in light of changing expectations. Businesses, particularly those reliant on borrowing, may find relief if borrowing costs stabilize or decline, but uncertainty could delay investment decisions. Households, especially those with mortgages or loans tied to variable rates, could see fluctuations in their repayment obligations. Export-driven economies may also face currency volatility, affecting trade balances and competitiveness. Ultimately, these developments influence consumer and business confidence, shaping spending and growth prospects. What should we watch next? First, keep a close eye on upcoming central bank meetings and statements for further clarity on policy intentions. Any deviation from current market expectations could trigger sharp market reactions. Second, monitor inflation data releases, as persistent inflation may force central banks to reconsider their stance, while cooling inflation could reinforce expectations of a pause. Third, watch for movements in government bond yields, which often reflect investor sentiment about future rate changes. Finally, observe corporate earnings reports, particularly for sectors sensitive to interest rates, such as real estate and technology, as these will reveal how businesses are adapting to the evolving environment. Smart money. Neutral. Smart money is adopting a cautious stance, balancing the potential for a policy pause against lingering inflation risks. Positioning in bond markets suggests investors are hedging against both rate cuts and further hikes, reflecting uncertainty about the path forward. Equity markets are showing mixed signals, with defensive sectors gaining traction while cyclical sectors remain under pressure. The risk signal here is clear. Until central banks provide more concrete guidance, volatility is likely to persist. That is what sits behind today's headlines. Thank you for joining us for Behind the Headlines. Until next time, stay informed, stay ahead. And if you haven't already, subscribe for more intelligent analysis, Monday to Friday.